Hello everyone, it's Steve with Aptera Owners Club. I'm sure you guys have noticed the channel's been a little quiet. I haven't been putting out as much videos as I normally do. And one of the reasons is that life has gotten very busy, work is very busy. But the other reason is there has not been much news out of Aptera lately. If you look at things that Aptera has put out, basically the last time Aptera officially put something out was like 6 months ago. I mean, 6 weeks ago, when Aptera put out their Artemis reveal video, their kind of live stream of that. That was about 6 weeks ago. And then about a little over a month ago, Chris Anthony and I had a little sit down when we got a little more information. But since then, Aptera has kind of been silent. There hasn't been much coming out of them. If you look at their official um, web page, we did not have an update in July, and it remains to be seen if we're going to get a monthly update in August. And the latest video they have is about a month ago, which was a short clip of their Artemis reveal. And if you look at their live, that was the Artemis reveal about a little over about 6 weeks ago, was the Artemis reveal. Now, I have been trying to get a date set up for me to go down and drive or get a ride in Artemis and check it out in person. And we have not been able to, they've been very busy and they haven't been able to give me a date. So I haven't been able to do that. So just there hasn't been much to talk about, really. Um, and I think I might have some ideas about why that is. All right. So several weeks ago, Aptera Time put out this video called Aptera to go public with hybrid direct listing. This is very interesting to me because I never heard of this hybrid direct listing. And so I looked into it. And it's not a secret that Aptera has been talking about an IPO for a while. I mean, that was their goal when they first started back in 2019. Every startup company's goal is eventually to go public. And the initial goal was to go public after they went into production. But when I talked to Chris Anthony at CES, there was a suggestion that they might go IPO to raise the funds to get into production. So IPO has kind of always been in the background here. And I think if you read between the lines, it looks like Aptera is probably going to try to go IPO to raise money. And there are several different ways of going IPO. So this is the traditional way. The traditional way of going IPO is you find an underwriter, and an underwriter is usually an investment bank. And what they do is they vet your company and they make sure that you are going to be a successful company, and then they agree to underwrite you, which means that they promote your stock, they analyze your company and decide what a reasonable stock price is, and then they have a portfolio of investors, large investors, institutional investors, hedge fund managers, and they basically pre-sell a lot of the stock to those large investors, and they release a small amount of the shares to the public market on the IPO date. And what that does is that they can sort of control the price after of the stock, because they can, if the price drops, they can stabilize it by selling some of their own shares that they own to artificially kind of increase demand and pricing of the stock. But this is the traditional way it's done. They usually take like a 4 to 7% cut of the total raised money as their fee. But this is the traditional way, and it's expensive, and you need to find an underwriter that will underwrite you. And most of the recent EV stocks have not chosen this path. They went through another path called a SPAC, and a SPAC is basically they create a shell company. The underwriter creates a shell company, and they sell the stock at some price, like arbitrary price, like $10, and then the SPAC goes and takes over a private company. And that's what Lucid Motors did, and that's what Canoe did. Um, and then I think the only recent EV company that went through a traditional IPO was Rivian. Rivian went through a traditional IPO. And so the steps to an IPO is the underwriters present proposals and valuations, and then the company chooses its underwriter, and then the IPO team, there's a bunch of accountants and SEC specialists and lawyers. They put together this document called an S1, which they submit to the SEC, and then they basically have what's called a roadshow, and they basically, the underwriter and the company leaders, they go and try to sell their IPO stocks to large investors. And then that's before the actual public IPO when it lists on the public exchange. Now, a SPAC again is the way that it doesn't require as many steps, but you still need to kind of sort of find an underwriter for the SPAC. Um, and the SPAC is a little bit of an easier process. Now, there's a thing called a direct listing. Okay, so the direct listing is they just list the stocks that they already own on an exchange like NASDAQ or New York Stock Exchange. In this way, they're not creating any new stock. In a traditional IPO, they create new stock that did not exist before, and so investors will undergo dilution. You will own a smaller part of the company because they've created new stock, and so the stock you own is a smaller percentage of the pie. However, the value usually goes up in an IPO, so the value of your stock, your stock usually goes up in a successful IPO. Now, in a direct listing, they're not they're just listing the company on a public exchange, and then you are just allowed to sell the shares that already exist. So the shares that people that bought shares pre-IPO, they can now sell them. The shares that the employees got as part of their employee package, they can sell them, and the founders can also sell them. But this is stock that already exists, so you don't raise any new money by doing a direct listing. Now, a hybrid direct listing is this thing called it's called a public, yeah, primary direct floor listing. So this is what Aptera Time was talking about when they say hybrid direct listing. A hybrid direct listing is you just list the company and you can create new stock and also list that. So you can raise capital this way. So hybrid direct listings, what they do is they allow raising of new capital. The downside and the upside is you don't need an underwriter. And underwriters have to be very careful about choosing their companies because their reputation is on the line. And if they sell a bad IPO to their book of large investors, their reputation is decreased. And a lot of times the underwriter buys all the stock that's being offered, so they're financially on the hook for it. So the underwriters really vet the companies that they want to take IPO, and they want to make sure that they're going to do well because their reputation and their finances are on the line. With a direct listing, you do not need to have an underwriter. And for small companies that don't have any profits or are seen to be risky, it's hard for them to find underwriters. And I'm guessing Aptera is going to have a hard time finding an underwriter. Who knows, though? Maybe they found an underwriter, which I think would be a big vote of confidence for them, that an underwriter thought that they were a good bet. But my guess is that they did not find an underwriter, and that was the case for a lot of these companies that went via SPAC. Their underwriter was the SPAC, but the underwriter underwrote the SPAC, but it's less arduous than the traditional IPO underwriting. The other thing about a traditional IPO is that there is a lockup period. The large investors that bought the stock, they can't sell their stock for a certain amount of time. It's usually like about a month or something, so that they don't flood the market and crash the price of the stock by selling their shares. So there is so they usually want to price. The institutional investors usually get to buy the IPO at a price that the underwriter, the bank, believes is under the actual market price. So, for example, if Rivian's IPO price was $10 a share, and that's what the large institutional investors got to buy it at, then the underwriting investment bank believes that when it actually hits the market, it will be above $10 a share, that it'll go above that. And so that the large investors immediately get a gain on their investment at $10 a share. And that's why these large investors will want to invest in these IPOs before they go actually public on the exchanges. With a primary direct listing, there is no underwriter, there is no control. The market just completely decides what the price of the stock is going to be. And so there's going to be a lot of volatility, and you just don't know. It's very hard to predict what the market will value the company at. And so that's what both a direct and a hybrid direct listing has that capability. The upside of that is you don't have to pay an underwriter and you don't have to find an underwriter. The last method by which they might go public is something called a Regulation A+ offering. And this does not require an underwriter, and you can only raise a certain amount. There's tier 1 offerings, you can raise up to $20 million, and tier 2 offerings, you can raise up to $75 million. These are similar to hybrid direct listings, but they have a cap on how much you can raise. And so this is called a Regulation A+ listing. This is the method by which Archimoto went public. So you guys remember Archimoto, they went public via a Regulation A+ offering. So let's go over it together. Canoe and Lucid went via IPO via a SPAC merger. Rivian went through a traditional IPO. Archimoto went through a Regulation A+ offering. And as far as we know, no recent EV stock has gone through a hybrid direct listing. So I believe Aptera time is probably correct, that it's going through either a hybrid direct listing, and I think the other strong possibility is that it is going through a Regulation A+ IPO. Those are the other things. Now, what makes us lean one way or the other? There's a very interesting thing about IPOs. If you look through this, yeah, so these are the alternatives. Okay, this is the lockup period. Yeah, trying to find where I saw this. Yeah, there's a thing called a quiet period in an IPO. And before a company's initial public offering, a quiet period is an embargo on promotional publicity mandated by the SEC. The quiet period prohibits management teams or their marketing agents from making forecasts or expressing any opinions about the value of their company. For publicly traded stocks, the 4 weeks before the close of a business quarter is also known as the quiet period. So during quiet periods, corporate insiders are forbidden to speak to the public about their business to avoid tipping certain analysts, journalists, investors, and portfolio managers to an unfair advantage, often to avoid the appearance of insider information, whether real or perceived. The quiet period's purpose is to create a level playing field for all investors by ensuring that everyone has access to the same information at the same time. It is not uncommon for the SEC to delay an IPO if a quiet period has been violated. Interested parties take the process seriously as there is a lot of money on the line. After a company files registration for a newly issued security with the SEC, its management team and investment bankers and lawyers go on a roadshow. During a series of presentations, potential investors will ask questions about the company to gather investment research. Management teams must not offer any new information that is not already contained in the registration statement, but can provide some level of informational gathering. The quiet period begins when a registration statement is made effective and lasts for 40 days after the stock starts trading, and is for analysts employed by the offering's managing underwriters, and 25 days for analysts employed by other underwriters participating in the NPO. The quiet period also includes 15 days before, after the expiration, termination, or waiver of the IPO lockup period. Okay, so there is a quiet period for some time before an IPO, and then there's a separate quiet period for analysts. So they're not like, you don't want to be like Goldman Sachs as the underwriter, and then immediately after the IPO, your analysts say that this stock is wonderful, you should buy it. They don't want people manipulating it that way. So for 40 days after the stock starts trading, your analyst is not allowed to make an opinion about the stock. But no one is really allowed to talk about it for a certain period before they go IPO. So if indeed Aptera is trying to do an IPO at this point, which we don't know, but the smart money is that they probably are, then that might explain why there's been a dearth of information from them for the last month or so. They might be in this quiet period where they're not allowed to talk about anything. If that's the case, then if Aptera is going through an IPO at this period of some kind, then when they go IPO, then this quiet period should end. Now, what I found out is this Regulation A+ offering. This is the way that Archimoto went IPO, and it's geared for smaller companies. So I was pretty sure that this is the method by which Aptera was going IPO, is through a Regulation A+ offering. But the Regulation A+ offering does not have a quiet period. So if indeed this absence of news from Aptera is a quiet period, that would suggest that Aptera is not doing a Regulation A+ offering, and is doing a more traditional IPO, or probably maybe this hybrid direct listing. Maybe that's what's going on. If this dearth of information happening right now has nothing to do with IPO, then maybe they're still going IPO through this Regulation A+ offering. But anyways, I just thought that I would give you my speculation on why Aptera is being quiet. They might be in this quiet period for this IPO. And the various ways that they can go IPO. Traditional IPO, SPAC reverse merger, direct listing, hybrid direct listing, and Regulation A+ IPO. So yeah, those are the options. Hopefully my explanation made some kind of sense. I'm not a financial professional, so I could have gotten a couple of things wrong, but this is from my reading. That's what I gleaned out of it. So if you have any corrections to make for me, please let me know in the comments below. Let me know what you guys think. One, is Aptera planning an IPO right now? Two, what kind of IPO do you think that they're doing? And three, do you think that the dearth of information now is from the quiet period, or just because they have nothing to talk about? All right, let me know in the comments below. Thanks for watching, guys. Have a great day.